So let's go to our last presentation of the day. I've asked Graham Gilchrist to talk to us a little bit about, kind of the market trends and opportunities of the offsets, but with a particular focus on, where it fits largely in farm profitability and what it means for dollars and producers' genes, and also to run us up to what's happening in Ottawa with the development of the Canadian offset system, and kind of what we can expect possibly in the pipeline in the short term, and hopefully leave us with a few words of wisdom on things that we can do in terms of maybe engaging in that process, both in Ottawa and in Edmonton, to make sure we get the policies in place we need for grasslands. So, Graham, over to you.
Thank you. Make sure we get this shared screen. Everybody can see that?
Yes, nice. We can. Yep.
So thank you, Cedric, and thank you everybody for the speaking here. Biological Carbon Canada, we're a nonprofit here registered in Alberta, but at the end of the day, we'd like markets to really define then the market opportunity for farms and ranches and the business community. So the debrief here is Cedric says, tell me everything you need to know in 20 minutes or less. So here we go. The one challenge is the background, and so as any good economist, you need to set the framework. So this is coming out of the 2020 report. This is 2018 data, but it shows what's happening in the ag industry for their emissions back to 1990. So you see the animal production, greenhouse gas emissions rising and then falling, and to let you know what's happening behind the scene that nicely mirrors what's happening to our female inventory across Canada. In our crop production, we have slowly been increasing our emissions over time. 15 million tons way back when, and we're now creeping up to 24 million tons across Canada. Our on-farm fuels have maintained relatively steady. And then we look at our sinks. We saw a rapid increase in our sinks till about 2005, and since about 2011, our sinks are shrinking across Canada. Any good farm economist should also then talk about the balance sheet and income statement. So went back and did the same thing. You can see here, this is the cash side of what's happening with revenue and expenses. And if you've never seen this format before, this is the BDO's new format about cost of goods sold. But you can see there is some light between there. And for those who like to do soil surveys, I did stick a soil probe down into the box, and then you should see then this is what's happening in 2019. You've got cash expenses just under $600 billion. You've got farm revenue at 66, and then you've got current liability stacked on top of that for 2019. So you have certainly a see across Canada what's happening with revenue, expenses, and farm health. Why I put this in here, it's important to them to understand where farms and ranches and where this all fits in the margin. But I have to start here. And the context is multinational. The Article 6 discussions in very general deals with country to country trading. So a lot of what we see within Canada is discussing then what happens is Canada wants to interact on the stage. And so Cedric asked me to talk a bit about what's happening in Ottawa. So you have a discussion right now within Ottawa of what's Canada's position and how can Canada benefit with the trading of Article 6 offsets. And that then drives policy levers down into Canada through all these various things. So then we have in Canada, we certainly have the backstop regulations, backstop legislation, and the Supreme Court with the POG ruling on issues around what's happening in Canada, and ultimately then, as we talked about here, the draft regulations to set up the emissions trading of the offsets between a volunteer provider and a regulated emitter. And then so we then start to look at what's happening in Canada. We have, I would call them two lumps. We have a serialized set of offsets and we have a non-serialized set of discussions. So within serialized, we have the regulated certificates. So in Alberta, certainly we've been trading those since 2007, and we will see, once the regulations have been finalized, we will see a regulated offset being traded in Canada between all of the backstop provinces. We also, those have volunteers offsets, and we certainly have talked about the CAR one, and the grassland protocol is one as well. And if we further want to get further in the weeds, we have those that are trading exclusively in Canada, and we can also have trading of those cross borders, certainly cross-provincial and possibly multinational. So it starts to get quite complicated quickly of what's happening. On the non-serial side, we have, I would put these into two spaces, one being cash and one being advertising. On the advertising space, we certainly have the insetting that's going on that's dealing with supply chains and not only providing a sustainable labeled product. A good example would be a New Zealand wine. Part of it's regulatory, but you know, how many grams of CO2e through your 100 milliliter bottle of glass of wine have you done? And we start to see more and more discussions again around EGNSs, the non-carbon side. And if there is a market, you know, large questions on exactly what's being bought and what's being sold. On the cash side, we have bonds now being issued, and those bonds are now supporting EGNS loan facilities, the big one being Maple Leaf. And we're also seeing direct investment. So that ranges anywhere from companies buying sinks or buying natural-based solutions. And we have folks like Alice using profits from those businesses flowing through their charity arm, and then because of the charity rules, divesting of those profits. So that gives you the context of the marketplace, and they're not all the same, and their weights and measures challenges are not all the same, and the rules, commercially, the rules of how people will trade in them and how they get paid are also not all uniform through the whole system. Remind everybody, as you're seeing this, is certainly we've been talking about soil health, and certainly grassland management is a big part of that. It does impact then ultimately then your profit margin, your sales growth within that business. And I'll leave you at that, but just understand that as you improve your soil health, you end up ultimately with a better resource of which to base your business on. Interesting things behind the farm expenses, what I've told you a couple slides ago, is on the left-hand side, you have the red highlighted ones. Those are the two farm expenses that currently are subject to the levy. So you have heating fuel being fully exposed to the levy, depending on what province you're at. And then when we deal with machinery fuel, for most part, those what we call in Alberta are purple fuels are exempt from the levy, but certainly there's assets being run with non-purple fuel, and they are fully exposed to the levy as well. When you look, though, at the IPPC and the report that Canada has, we have issues within cost of goods sold and direct expenses that have emissions that are currently exempt, both from the levy and the reporting. So the farm businesscape has emissions throughout it that either are subject to the levy or would be subject to reporting, currently exempt, or subject to the curve bending, if you want to call it. This is a little more this big slide I gave here to the Canadian Federation of Agriculture, but from the look at the number of offset possibilities are available out over 30 years and, heavily discounted, there is about a $500 million possible revenue that can come in on the agriculture farmscape. Yes, there's some hiccups, and yes, there's some challenges in getting a protocol built and then having a fully functioning market to capture that. On the other side, we also talked about, the 30% gathering of fertilizer. So my assumption here was you bought a ton of fertilizer, you'd like to keep that whole ton and put it all in the ground. And if you're losing 30% of that fertilizer before you get it to the root zone, if you can keep it all based on what we spent on fertilizer in 2019, that's a $1.7 billion saving that you can put into your energy. The other thing is changing where your profitability and cost centers are on the farm. Some very good papers coming out dealing with changing your efficiency loads from 90% back to 75%. Means you're just burning 20% less machinery fuel, and based on what we spent on machinery fuel in 2019, that's a $500 million savings. So this is the stacking piece, not necessarily stacking protocols, but you are stacking both revenue and farm efficiencies to improve your ultimately your bottom line on the farmscape. Frederick asked me to talk about May 5th. So currently the draft regulations are out there and they're available for comment. And if there is any call to action, I would highly suggest you read the regulatory part, understand it, and then get ready and make your comments, because I've got a couple little slides later on that talk about their current drafting and their current challenges. So price times quantity. As the regulations are currently written, the output of a protocol will have a whole bunch of considerations as you design it. You're going to have to deal with the volunteer management reversals, and to ensure that, number one, they don't happen, or number two, does the market require you to fix it? There are natural reversals that will happen. There is a bit of a bank, as you see down as the 3% plus, but are you going to be able to handle that at the parcel level, or does the protocol have to get designed at a pool level in order to handle those changes? Couple little things within the current design of the regulations. If you've got a species at risk or any other protected requirements on the landscape, they need to be very clear that they are not protecting other issues. And if you can't show that, you may not be able to generate an offset if there's some legislative protection requirements. The one really stands out is then the species at risk designations or orders that are currently out there. Brian talked about certainly the modeling coefficients, and depending on how you want to design your protocol, are you going to accept the modeling coefficient, or are you going to drive for an actual on-farm or actual project at your farm level, and which gives you the best coefficients, notwithstanding that you're going to have to pay for them. Karen talked a bit about this as a bit, and currently in this draft regulation, we will see again the federal government, as I talked with Jackie Mercer in their program, you will start to see federal program agreements that will start to deal with whether or not, if you take the money, are you going to give something up within the protocol market? And so you need to read the fine print as you engage in not only Environment Canada funding, but all of the ministries will start to see these agreements, clauses within the agreements, and landowners and farmers are going to have to be very cognizant. They're going to have to read the agreement to see whether or not, what are they buying or what are they trading for those funds. Permanence, this is really based on the country to country. It is a given. We're not going to get around it. We're going to have to be very clear on the ownership, particularly on land-based versus farm-based, and it will mean challenges to, here in Alberta, 45% of the land is rented, and you don't see written agreements very often. So you're going to have to clean up exactly the ownership criteria. And then you're going to lose 3% right off the top with the bank. And you may lose more depending on your ability to ensure permanence and ensure management reversals and so forth. So the protocol design is critical in all of this process. On the price side, there are some considerations you're going to have to deal with. Not all of them, very little of these are in the offset to regulations. But you're going to have to figure out, whether it be a unanimous shareholders agreement or something, you're going to have to handle essentially a 5-year management reversal protection. You've got the 100-year challenge of permanence plus the crediting period. So it really means you're going to have some sort of management reversal protection that will span 5 generations into the future. Whether or not you can buy natural reversal insurance to cover what you have, particularly if you're at the project basis. If you can pool it, it's even better, and we've seen that with forestry products. But if you're going to ask for the protocol to deal with a farm-based approach, you're going to have to deal with natural reversal insurance or some other to make sure you can provide back if your pool 3% cut can't handle it. There will be commissions, verification, certification costs in all of this. And don't guarantee that the $170 price is what you're going to get, because there will be buyer basis and risk premiums attached to that discussion. And at the farmscape, you're going to have to build the farm evidence and secure title, and that will come as a cost as well. Cedric asked me to get out my crystal ball in Ottawa. So here's certainly what I think we'll be dealing. We will see eventually the cabinet approving the regulations. They may not be in this format, but they will be approved. And the minister will further shore up then the protocol approval and building process. And then we will actually see approved protocols in the natural-based solutions coming to fruition, whether or not they are in the current list or somebody will take and undertake the cost of building one and submitting it for approval. We will also see that will further make things more complicated. The rebates coming from the federal government levy collection will start to also show up in our households. So that, as the minister said here the other day, they want the pinch point on the levy, but they also then give cash back to households for that. The POG decision here this last week with the Supreme Court will certainly now have provinces deciding whether or not they're going to be subject to the backstop levy federally, or they will create their own. And so we will see over the next 24 months various provinces deciding ultimately what they will have. Will they will have a provincial based, or they will have a hybrid like Alberta, or you'll have something totally subject to the federal backstop like the Yukon as an example. Certainly, though, the discussion of permanence is here, and it's baked into the country-to-country trading. So I do not see, permanence being withdrawn in Canada, ultimately because Canada would like to trade that country-to-country. And I would say it's a go-forward creation. Some certainly comments have said the 217 is a generous going back, but these are go-forward creations. And tradable products. The other 24 months is certainly we're going to have good debate. Understand that ag is an exempted emitter. It provides about 10% of Canada's emissions. And currently, other than a few of the products subject to the levy, we as an industry are mainly exempt from the reporting, which has a cost factor. And then for most part, our emissions are levy exempt. We should see our first sale. Certainly there are 2 livestock protocols that are currently licensed federally. There are aggregators running around. They have to decide whether or not they're going to sell it locally within Alberta's registry, or they're going to change those registries and move it over to the federal system. We're going to quickly figure out who's buying. And we're still going to have some discussions around the weights and measure rules, both regulatory and in the volunteer side. And you're going to see, poolers expand. That's the definition in the Grassland Protocol or the CAR Protocol, and the aggregators are going to be out there. So yes, there's 3 here in Alberta. Fully expand, those aggregators will start to push out across all of Canada, depending on what markets are being done and where those offsets exist. The challenge here, and Brian alluded to it, is the farm community is going to have to press hard for evidence alternatives. So if the evidence or the accepted evidence is not in the protocol, you're not going to see it in the verification. Verification really is a question of, did the project create the offset as defined by the protocol? So if you're going to want gee whiz stuff, satellite imagery, models dealing with the changes in soil organic, or easier way to kill an animal sooner, you're going to have to define that in the protocol, because without it, evidence after the fact won't cut it within this process. Certainly, there will be public purse lobbyings and some of our comments around to remind everybody in this process, there is no government money. These are certificates of either greenhouse gas reduction or other attributes, and somebody else is paying real money to buy them. The regulation, the offsets create the rules of which at least the emitters can buy the offsets from farms and ranches, but the federal government is not creating a subsidy in any way, shape, or form, at least as what they've talked about today. Couple of big questions. Certainly, we saw this last week. The Weston group of companies have decided to sell their bakery business, which is a large part of the process. And will that have an impact on the funding, essentially the charity through Alice gets from the Weston profits? And lastly, we saw the $2 billion EG&S loan Maple Leaf take on. And there was a series of bonds behind it. So we have the framework. We'll know whether or not that type of EG&S payment from the financial market will continue to move across Canada. So some questions or possibilities there. 2 big questions, I think, ultimately, then you're going to have to get your hand around. Are we bending the IPPC report curve? So that really means, is agriculture going to play its part in Canada's dropping the 30% from the 2005 levels? Or with some overlap, is an individual farm going to bend its own curve? And if it's not, then you've got a challenge with green advertising, that if your output of greenhouse gas doesn't change, but your amount of milk being produced or the amount of kilograms sold continues to go up, you've got an index that says you're looking better, but your actual output isn't changing. So you've got those big decisions ultimately the industry and an individual farmer is going to have to take on. This is back to Brian. You need receipts. Can't run around and say, I'm green. Thank you, Cedric. Thank you for the time, and look forward to your questions.